Alright, so we have a market open. So it breaks to the upside first. From my previous notes, it always seems to want to go in the opposite direction in the beginning of the opening price, then turn around and reverse. We'll see if that holds true in this market open. It's 6:30 a.m. Pacific Standard Time. Today is the February 11th. As you can see at the bottom right, it's 9:31 in New York, and the market is live and active. So, just to disclose what you see on the chart here, this yellow section represents the first 15 minutes, the last 15 minutes of the prior session. If had I put this on a 15-minute chart, basically that would be representing of one bar, one candle. But I'm on the 15-second, so everything seems to be a little different. So we're going to see how this opening price works. I'm going to also do something here, highlighting this area because it's the opening range at the beginning of the session. And at 10 a.m., there's going to not only be a macro, but that's going to end the opening range and begin up there. I'm going to change this color to give it contrast. And lock this chart so I won't move around and scatter things. All right, so here we go. I'm going to be aiming for, and here's my entry there. I'm going to be aiming for this New York midnight price today and pull some back. So I'm going to put if I can get over here, I'm going to take some off over here with a limit buy of 2. At this level, okay? And I'm going to leave the runners on, looking for a target of the London lows here. Let's see how price delivers today. But one more thing, I'm going to go look for a rejection block. So I'm going to make an adjustment to that as well. Open thing, come on. This is why you want to lock stuff. Let me lock that. So let me move a candle. It won't let me move it. What I'm trying to do is make this bigger. There we go. Where I can identify a certain candle. Which candle is it? Get over here. And I think I see it. Okay, I see it. The candle that I want to identify. Come on, get over here. Is it moving? Candle I want to identify is this one right here. And I'm not going to include the wick, but only the body of the candle. And I'm going to lock that. I'm going to have to label it because I have another purple one over there. So, rejection block. And this is going to be to the right. And change the color because I have some kind of color over there already. I'm going to make this one a little thinner. And let's lock that right there. And lock that. Okay, so let's reset this chart and get back to where we need to be. Okay, so we can see where we're running at right now. And I'm going to lock this right here too. Here I'm going to pull off 2 with the buy limit, and it's going to allow 2 to be remained, targeting this rejection block area here. So I have that pretty close. And then I'm going to do a buy limit of 1 right here at this rejection block to get out of this trade. Okay, that means I'll have 1 left, and I'm going to leave that 1 on for a runner. With the hope of going down to the Asian low. So I have multiple objections already in play. I already know which direction I want to go in. And now let me make some further notes on the chart that I didn't do already. And this is for educational purposes only. And what I'm going to identify now is what is known as a fair value gap that Michael teaches and taught me. And as I go to the candles, I'm reading price action right here. So I'm paying attention to this area. And I see it, and I'm going to mark it on the I'm going to mark it right here. This area right here. We'll bring it all the way out to the close of the opening range. And this one is the first presented bearish fair value gap. Okay. Now, what I also like to do, only for practice purposes, help me identify fair value gaps. I also include another one, and I call this one, what do you guess? The second presented fair value gap. And why did all that turn red? That's not right. That wasn't supposed to turn red. So now I have to go back over here. Well, what happened here? Come on, thing. Let me unlock that. This should be a blue in color. Not. And the entire thing shouldn't be highlighted, only a section. Alright, we shouldn't have no red border. I don't know how that changed. I should have a template for this. No, I can go through all that. Let me just go to the 15-minute real fast. Oh my goodness, it just took it all the way to the end, didn't it? So I'm not going to extend it to the right. There we go. That should have fixed the problem right there. All right, so I didn't want it that color, but it is distinctive, different from the pre-opening price. So I'll just let that stay there and lock that. So just to recap here, this yellow area is like pre-market, pre 9:30 market area. This area that's in blue I have shaded is the opening range. Temple. Uh, I'm just going to do the settings on the bottom here. And text. This is going to be 9:30 a.m. to 10 a.m. opening range. I want that outside on the bottom and in the center. 9:30 to 10 a.m. opening range. And I thought I had this saved in there, but I'm a template hower. So I'll create a template for it in a minute. Okay, so there we go. All right, so that's where we are right now. And look like we're in profit here, jumping. My plan and strategy is already laid out. So let me go and recap on what I plan, how I hope this trade would plan out. If you look here, you see a limit buy. That means I'm going to take two micro contracts off so that 4 will go down to 2. Okay. Then if I left this one runner on, which I'll take out, that'll be a total of 3 if price goes to this rejection block, which is way on the left hand side that I took the time to seek out. And the London range, this should be a London range low. That's mislabeled. So let me pop into that and see if I can correct it. I have it locked. I'm going to click on it. It opens for me. There we go. And I'm just going to change this real fast to say low. And then click OK. Then lock it. Here's London's range high. It popped up a little more because of the opening range. We're already below that. Right now I'm thinking about protecting some assets. And what I mean by that is moving my stop to a profitable area. So we're testing the second presented fair value gap. No, the second presented fair value gap right there. It doesn't have to be extended all the way to the right. I guess it could because we don't know how long this is going to go. So I will extend that and lock it. This one, unlock that one, extend it out. Now I realize why I did that. I only want to extend that out to the first 30 minutes in price action. Second one I can extend out further. Looks like price is going to retest that first presented fair value gap. Now in trading, you could have a great idea, a great concept, But ultimately, the market's going to do what the market's going to do. In hindsight, I wish I would have taken that $500 that was down here and just got out. Um, One of my other drills, I was doing a drill on identifying reversal patterns, and I wasn't paying attention here, trying to do all this other stuff, and I missed it. Let me put the arc on here, and I missed this 3-bar reversal right here. That's not it. Remove that. Get the arc here. Boom. 3-bar reversal. Candle 1, candle 2, and candle 3. It also forms something people call the power of 3. Michael teaches that. I'm going to annotate that on the chart for you. For me, the power of 3 works better on a higher time frame, but it presents itself everywhere. It's also known as really a 3-bar reversal, okay? It's really a 3-bar reversal. And going to put that on the chart for you guys who are learning. Now, as you see before, price came and retested. This first presented fair value gap. It hasn't inverted to become an inverted fair value gap because it hadn't continued up higher. But I do see something here where the price is at, where the opening price is. I'm going to bring that to your attention. And you probably didn't see it because you don't read candle patterns yet. But you're going to get better. Be patient and practice. This open area here, I'm going to extend that out to the end of the opening range. That little piece of information right there is known as a volume imbalance. Price imbalance, volume imbalance, a point of interest. You can name it what you want to, but people have names for that all out there on the market. And price typically comes back to fill that area, as you see right here. I anticipated going up one more time before it goes down again. I could be wrong, but we'll see what price does. Here is another power of 3, a 3-bar candle reversal pattern. I'm paying attention to them now, you guys, so I can mark them out to help you see them. That's candle 1, 2, and 3, so a 3-bar reversal. And you'll also see one right here. Being that we're on a 15-second chart, and I'm trying to do commentary live on this recording, it's yet something I want to do for myself to keep an eye out on things. Now, when price comes over to this area, the side of the red line, I'm going to be looking for and making new annotations on this side of the range because of the end of the 10 a.m. opening range. and I'm going to note the high in the 10 o'clock opening range to noon. So if I go to my other, let me just change time frames. This probably help me. So this is setting the stage for what this day may look like. Now I'm seeing these relatively equal lows here. I'm going to annotate that off the 30-minute price template. Now I'm going to use internal sell side liquidity here. But this area is what I'm looking at right now that my eyes are paying attention to. These are relatively equal highs, internal sell side liquidity. You'll hear a lot of different names that people use out there, and you pick and choose which one you like to stay committed to. I don't remember what this line is. I think this line was an accident. Uh, internal side, sell side liquidity, rejection block on a different time frame as this candle. On the 15-second time frame, the area is a lot bigger. It's a bullish engulfing candle. So, and that's where price rejected it went higher. That's why I have it called rejection block. I'm gonna tighten this up here a little bit. Put that on that candle. Relock it. During the London session, this is the low. The lowest the price ran to during the London session. So this is the London's range low, and it was this candle on a 15-minute chart. And somewhere in here on the other chart was the high, but it was on a different time frame. You see previous session high, this little line here, it's a divider for trading sessions. That's a different trading session, and that's a different trading session. This session is the Asian session. So I ran this low, Asian low. This would be the previous session or the Asian session's high. I just named it previous session. I could have named it Asian range high, but I can identify what it is. But I just want to share that with you there. And go back down to the 15-second chart and watch price. So we talked about the power of three or 3-bar reversals. This is the 9:30 to 10 a.m. opening range. It ends at 10 a.m. at 10 o'clock. And after 10 a.m., I'm going to be looking for the highest high between 10 a.m. and noon. Okay. What I have planned out may or may not work today, but I believe it will. Um, I'm planning on getting out of 2 micro contracts here, one other here, and let the other run, targeting the Asian low and see if we can capture that. Or if price wants to deliver at that location, is what I'll be doing and taking a look at. Uh, I should be having this in points because when I look at this and I see a few $100s, I mean, some days I'll just close out and say, okay, I made X amount of dollars today. So I can change this to put percentages or points in teaching and being fully transparent with you guys. Some people be tripping on the money and some people don't. Either way, I'm not trying to concern myself about the money, and I don't want you to either. I'd rather you to focus on the process because the money's there. Once you get the process down, you can identify, you can label, you can call things out before it happens, and you just have to be patient. Trading's boring, really, because right now I'm just talking because I want to record a video, right? But I'm set for the day. Once I move my stop where I'm comfortable with getting stopped out for the day, I'm gonna go about and do whatever I want to do today. Here's a fun fact. Let's do this real fast. $484, and let's say, or did I do that wrong? Okay, say let's do $450. It looked like we had 450 something. It's bouncing around. Uh, in 30 minutes. Now we got 530, 520 in 30 minutes. Now I'm gonna move my stop because we're gonna end here at this macro. We took out this low, and that typically lets me know price might be doing something different. Now I'm protecting $392. Price is at $788 up here. I'm gonna move. It should be three. Let me see this candle here if I can have a better stop loss. I'm going to identify this area. This is interesting right here. At 10 a.m., since we didn't get that before 10, I'm gonna make a choice to lock in more. And the reason why I'm doing that, when this uh, set of macros start to cause price to change, typically it's going to spool or start going to in the opposite direction. And I want to protect as much capital as possible. And I was hoping this would go down to here before 10 a.m. Right now it's 6:58. It's going to be 10 o'clock in New York in 2 minutes, and it has delivered $940. I'm going to protect a little bit more of that. So in 30 minutes, only with 4 micros, uh, I'm locking in $652. Looks like the market wants to deliver up to $1,000 a day. I'll take that. So if it gets here, I'm gonna take out two and leave two. That's already in my plan. I told you about before, and I'm looking for a runner. So I see a gap here. Is that strong gap? I'm going to identify that gap. See if it rejects that, or will it hold? I'll take the mean threshold or the consequential quotient or the 50% level. Now, if it closes above that, it doesn't leave leaves that space open. I'm gonna move. I'm gonna move my stop a little lower, and it looks like it's gonna call me to move it a little lower. Oh, maybe not. It didn't close there, so I'm gonna lock in 780. I see the power of three or a 3-bar reversal right here. So we're out of this trade for the day. Okay, so here is a 3-bar reversal, the power of three we identified before. See, I have a drill in one of my videos. I had to re-record because I have a better microphone now. But I'm going to give you guys some drills to do. You can practice to learn how to identify things quickly on a 15-second chart. And it happens on every chart too. Now, because we didn't close, well, let me see if we have a break of structure here. If we have a break of structure, if this wick, if this goes lower, let's see if we can see this better. Is that a break of, no, no. If we break this wick low right here, let me identify that. Let me use a different thing. If we break this low here, I might consider uh, getting back in. But we have a breaker structure here, and we're going up to this other fair value gap, the power of 3. Let's see how strong this is. Now we are in the 10 a.m. hour now. Okay, so what I'm going to be looking for from 10 a.m. to noon. Let me go to a 15-minute chart. From 10 a.m. I don't have it marked out here. I don't have it marked out, so I should mark it out. I'm going to get rid of this. Remove that. From 10 a.m. to here, I'm going to put another color here. Oh, I just got triggered in, you guys. And I'm going to mark this up here. I'm going to put mark out the high of this hour, time of day. Okay. I want it outside at the bottom. Boom. What that should have done is put it down here, and it did, but it's just small. So I'm going to make that that text a little bigger. And I'll make it bold. And I'll let me match it with 20 with the lunchtime. All right, so you might have asked or thought to yourself, why am I doing that? And that's a good question. So let me explain. From the 10 a.m. hour until the noon hour, there's a macro that's going to begin at 10:50, another one at 10:10. I'm not mentioning that one here. But what I'm going to be looking for during this hour, I'm going to be looking for the highest high that I can mark out, because I might want to trade that real quickly in the lunchtime hour. Not going to risk a whole lot. I won't go with 4 micros. I'll reduce that to maybe 1 micro. Why do you want to do that? Well, it's probably going to be a counter trend trade, and when you start to understand trading with the trend and trading counter to the trend, anytime, in my opinion, if you're going to trade counter to the existing trend, reduce your risk. You can capture a few points if you want to trade like that. You don't have to trade in both directions. As a new trader, as you learn to trade, you'll hear a lot online about trend trading, counter trend trading, and some people try to call it whatever or different, try to name it something. The bottom line is trading in the opposite direction of the major trend. And if you make that a habit of yours, of course you have to make the habit first, right? Then I wouldn't recommend that you risk the same amount that you would risk trading with the trend, if that makes sense. In other words, if it's going to go against you and you lose, it's better to lose less than to lose the same amount you would if you're going with the trend. Like we just had a quick pullback, probably noticed on the 5 minute chart. Let's see. Okay, so we had, it triggered me in here. So somewhere there was a pullback. Okay, so it triggered me in on probably this one here or that one. I don't know when it did that, but I anticipated at at 10 o'clock the price would go in the other direction. But I'm getting some rejection here on this 1 minute fair value gap, and that's a good sign because I think we have. I'm not sure if that's accurate there, but kind of give you an idea of what I'm looking at here and bring it to your attention. This right here, basically, I believe, I can't see because of this line, but I'm just using the body of the candle and going to this wick, assuming it was a wick in here somewhere. But I'm going to make that a fair value gap, and I'm going to lock it. And I wouldn't call it the third presented fair value gap because there's others here. But the first two are for me, in my trading style, the first two are the most important. Anything below that is just gravy because I'm already out of the trade. I'm in profit for the day. I forgot what it pulled out there. It doesn't matter. I was going to take two off, but I decided to close it. And why is this? Oh, this is going the wrong direction. Why is that a buy? I did the wrong direction. So I don't know why that did that. So I'm going to jump back in here. We're going with the trend. So I'm going to put in 4 because we're going with the trend. And I'm going to go down to this internal range. What the heck? What are you doing? Did I click the wrong button again? This is supposed to be a sell. Is this a buy? This is a buy. Actually, you pushed the wrong button. Let me close that. Buy. It's supposed to be a sell. Sell for. I think I accidentally clicked buy. I have to check the video. So I want to sell, and I want to get out of this trade here. That's the goal. That other limit order was designed to pull two positions out of the market. I went a different direction because of what the market was telling me. And here's a note. I told you on a counter trend, you want to risk less. Right now, the trend to me is still bearish, so I added another 4. Now, if I want to look for a counter trend, which means to go up like it did right here, I would only risk 1, just in case I got stopped out. Because you're not going to be perfect and hit everything every time. Now we have this eternal sell side liquidity, which is these relative equal lows over here to the left. We have another smaller one here I didn't identify, and that's okay. And then we have this rejection block. Looks like a order block, right? I would call it an extreme order block in this price leg or this order flow, this first leg of this order flow. If you haven't seen my video on order flow and order blocks, I encourage you to search them out. I might re-record it because I have a better microphone now, and then I'll share some things about what I've been taught. As I look at this area here, I call it a price leg. You can also call it an order flow. Each one of these candles typically have a name that you can use to identify different situations with. And here's a rejection block here as well, along with this one that you don't see. This block is also, well, people have a different name for it, okay? Some people are going to call it a bullish engulfing propeller bar, right? Uh, you can call it that. You can call it whatever you want to. You just need to understand what that block represents. Looks like we're going to get a fill around 400 bucks. Um, and if we don't, I'm going to capture at least half of that, right? In case it pulls back on me, I want to take at least 200 out. But anyway, I'm already done trading for the day. I'm only finishing up this video until this trade ends. Then I'm going to take a break, and then I'll come back at 10 a.m. my time to discover. All right, we got another 400 bucks filled there, and that's going to end this video in my trading. And I'm going to wait until the lunchtime to trade because we did the pre-market open. Let's go back to the 15-second. Identify some things here for you. This yellow area that I highlighted reminded me pre-market sections. I was looking for the high of the session. The blue area here is the pre-market. I mean the 8:30 to 10 a.m. opening range. At 10 a.m., I anticipated a shift in price, and we see that at 10 a.m. it went higher. It pulled back. So at 10 a.m. you typically get that. And by the end of the day, this first presented fair value gap might be the high it returns to. Price may continue to go down. Uh, if it does, it should go down to the London range low. I'm not interested in continuing trading right now. I'm tired of talking, and I'm tired of I made a few bucks for the day, and I'm just going to rest. Okay, but I am going to come back at lunchtime, and typically if this runs lower, at lunchtime it'll run higher. So I'm going to take me a break for a few hours, and then I'll be back at 10 a.m. and I'll decide if I'm going to make some trades during the lunch hour. Most people teach you don't trade the lunch hour. Oh, we went all the way down to the rejection block. My original strategy, remember that before I took it out, would have been to take in some some trades off and let one run. I changed my mind mid trade, but that strategy would have worked in this case. So until next time, I hope this was helpful for you. I pray that Father would bless you, keep you, make his face shine upon you, that you and your family be blessed, that you walk in prosperity and health. God said in his word, Jesus said in John 10:10, beloved, I wish all that you would, above all, I wish that you would prosper, even as your soul prospers. And you have to make a decision if you're going to make a commitment to trading or a commitment, period, to anything you decide to do in life. Me in my life, I decided to make a commitment to trading because I don't know where a job I could make $1,000 in the first 30 minutes of the morning and go about my day. I enjoy the freedom that trading gives me. You know, it's freedom and liberating for me. And we hit the London low. Boom, boom. So had I stayed with my strategy and not wavered, I would be out of the trade right now. All of my positions would be closed. But here's a tip. You remember when I enter back in with 4? I'm not going to talk about that. I'll leave that for a different video. But thank you guys for watching the video. Please like, subscribe, spend time learning how to trade. It can change your life and give you freedom that you really want. And until the next time, enjoy this day.